Hello everyone, PS from PS Invest Plays here today. We're going to do a face-off between XLE, Energy Index, and our favorite, QQQ, Technology Index. In this video, I'll go over technical analysis, reasons to consider before buying either of them, their price prediction, and finally, my recommendation of which is better to buy now and later. So stick around. I think you'll like what I have in store for you today. If you like this video, please consider subscribing, hit the like button, leave a comment, and share this video with your friends and family. With that said, let's get started. Alright, let's start with XLE. Ticker symbol is XLE. It's an energy index. Before we begin, let me start by saying that if XLE increases, it means oil prices are going up, which will result in inflation. It is definitely good for XLE, but not so good for QQQ, the technology index. Now with that said, and it's out of our way, let's do a deep dive. In 2021, I think oil price should increase to $82 and stay at this level, which is an elevated level, for some time. In the second half of 2022, oil prices should drop. Now, if we look at the macro landscape, we have points such as vaccines are extremely effective, which is a very good thing for humanity. We want this pandemic to get over. CDC guidelines are getting more relaxed. Schools are planning full-time return for kids. Bottom line is, economy is reopening. People want to and are planning to get out of their house and travel. This is resulting in higher oil consumption. With all the environmental concerns and increased adoption of solar electric powered solutions, we are still at least 5 to 10 years away where we move away from oil. Now let's look at the micro landscape. Oil and oil stocks were hammered in 2020. Do you remember in May 2020, oil prices turned negative, meaning you were paid to hold oil. In 2021, the theme is value play and reopening of the economy. I think there is still plenty of value play left. Now, keeping these points, oil stocks are poised for excellent gains in 2021. With all these points covered, let's look at the technical analysis. The general trend for oil is down. What that means is that the general trend over a period of 20, 30 years is that the oil prices should come down or have been coming down. However, with the pandemic and the changes in the macro and micro landscape, we've seen a good rebound, but I don't think that this will last for a very long time. If you look at the technical analysis and especially look at the Elliott wave, we see that in 2020, oil completed its first and second waves. It is currently in its third wave, which I think should take XLE to around $65. When that happens, I think there will be a small pullback where the price for XLE should come down to around $61, around about that price, $60 or $61. And after that, it will start its final leg up, which will take XLE's price to the $85 to $92. So currently, I think XLE is sitting around $52 or $53 or $54. I think there is at least a 30 to 40% upside left for XLE in the short term. Moving on to Nasdaq. Now, as per the Elliott wave and technical analysis, we seem to be in the fifth wave of the bull run that started in 2008. Fifth wave seems to be halfway through. This fifth wave seems to be halfway through and has some more room left. Due to the uncertainty in the markets regarding economy reopening, higher bond yields, anticipation of reduction in bond purchases by Fed, inflation concerns, increase in interest rates, yada yada yada, all the noise, we seem to be in a flat correction, which is the fourth wave of the larger fifth wave that started in 2008, with the bull run that started in 2008. So what do we expect? I expect Nasdaq to bottom out around 12,000. I know it went down to 12,100 or 200. I expect that Nasdaq to retest that price again. My 2 cents are, economy is doing much better than 2019 and especially 2020. Technology is the future. However, in the short term, oil prices will rise and result in higher inflation. So short term, if you hold Nasdaq, which is QQQ ETF, it will be a painful uptrend. There will be deep downward pressure followed by slow positive movement. There might even be 10 to 12% corrections. High-flying stocks will be punished even after excellent quarterly earnings. This is not 2020. However, long term, I'm extremely bullish on Nasdaq and QQQ. When this larger fifth wave of the bigger bull run that started in 2008 is completed, I expect a healthy correction. What triggers it? I have absolutely no idea, but it should happen. My 2 cents would be book profits whenever possible. Definitely book profits when Nasdaq is around 14,500 to 15,000 and reinvest using dollar cost averaging. Let's look at the technical analysis. So as I was saying, the bull run that started in 2008, we are at the last and final fifth wave. After the fifth wave, there is always a correction. If we look deeper in this fifth wave, we have completed wave 3 and currently we are sitting in a flat correction, which is wave 4. We are still not, I know I have it here, we are still not in the final leg up, which is the fifth wave. We are in a flat or an expanded flat correction. You will see higher highs, lower lows. It will be extremely frustrating. I would advise not to trade around this price point when we are in this correction. It's extremely dangerous. When we see that we have entered the final leg up, which is the fifth wave, that is the time to buy. So with that said, I expect in the 1 to 2 years, Nasdaq to hit 14,500 and 15,000, between 14,500 and 15,000. Is there a better way to make money than investing in QQQ, where we can expect downward pressure pretty much every day. Yes, there is a way. I would say short term, which is 6 months to 1 year, buy XLE. Longer term, if you believe in technology, I would say buy QQQ. In fact, consider this as a discount period. Or consider the next 1, 2, or 3 years as discount periods. Where you buy and hold, you will see red days. But over a long period of time, 5 to 10 years, you will come far ahead. But if you're a smart investor and you want to take benefit of both of them, what do? I would say buy both for diversification and sell XLE when it reaches the price target, which is $85 to $92. And then buy more QQQ. This way you are able to maximize your gains. What do you think? Leave a comment below and let me know if you would buy XLE, QQQ, or you would buy both and follow this strategy. Well, that's it for today. If you like this video, hit the like button, subscribe, leave a comment of what you think of this video, and share this video with your friends and family. With that said, see ya!